Hello and welcome. You're joining me, Bianca McIntyre, for Crypto News Australia. Right now we've got Joni and John from Hall and Wilcox. Welcome.
Hi, how you going?
Hi, thank you.
Tell us a bit about your roles and what you're working on at the moment.
Well, I'm a tax lawyer, so originally got interested in all things blockchain just over a year ago. Read an article that tax rules could be coded into smart contracts, and have been trying to find the answers to that ever since. And on that journey, increasingly getting more queries from individuals, companies, investment funds on the tax treatment of cryptocurrency transactions.
I'm a financial services lawyer at Hall and Wilcox, and we had a client come to us and said that they wanted to create an index for cryptocurrencies, and that sort of piqued my interest in cryptocurrencies and blockchain, and the sort of things I've been working on since are setting up cryptocurrency funds, reviewing white papers for people, and giving advice on setting up cryptocurrency exchanges.
Well, now with regards to cryptocurrencies, what are the biggest tax questions that you get about crypto?
Well, from individuals, it's the main one has been, am I taxable on crypto-to-crypto transactions? And based on the current views that Bitcoin and cryptocurrencies with similar characteristics to Bitcoin are assets, like property, then when you dispose of one crypto for another crypto, that is a taxable event. And you need to keep records about the Australian currency values at that time to calculate what your profit or loss might be. The other big question is, in tax world, we have this split between what's on revenue account and what's on capital account. A lot of, or there is a view out there that if you simply hold cryptocurrency for more than 12 months, that it's on capital account, and then you can access this thing we have, the 50% discount. So it halves your gains.
Okay.
But we don't necessarily agree with that view. There's more involved than just simply holding crypto for 12 months. Yeah. There's a bit of analysis that goes into whether you're holding it as an investment, and generally investments that give you some sort of return, like dividend or interest, yeah, those are treated on capital account, whereas something on revenue account is where you've got a profit-making intention, and with the implication being that if you're an individual, you're taxed at your marginal rates. Okay. So it might be more efficient if you're going to be trading cryptos regularly to do that through a corporate structure and have the benefit of a corporate tax rate.
Yeah. All right. Well, and what about like tax considerations? Are there any kind of tax considerations that people would need to know about when dealing with crypto?
I think that they're constantly changing, and a year ago I would have said just keep good records of Australian currency values, your intention for buying that cryptocurrency, whether it was something like hobby or personal use. What I haven't touched on is there is an exemption in the tax law where you are not taxable on gains where the asset has been used for a personal use, but the asset has to be purchased for under $10,000. So, but increasingly going forward with utility tokens and stable coins, and even people in the community getting involved in proof of stake, the returns that you're getting from that, and how they might be treated for tax from an Australian perspective, as well as other countries, will be something that individuals could need to get advice upon early, and understand the full tax implications of their strategies.
Before embarking on it.
Yeah, otherwise having to deal with it after the fact and recollect records and exchanges that might have closed down or ICOs that might have failed.
Yeah.
Also in our firm we have a disputes practice where ICOs may have been mismanaged, yes, and cryptocurrency pledged has been lost with no right of recovery. Wow. So more and more so, it's important to understand both financial services and tax implications if you're going to get into this area seriously.
Well, that is definitely not information that I even knew about, so that is really good for our viewers out there to understand before they embark on such an exchange, really. So moving along from that, would you be able to summarise the ASIC guidance relating to the ICOs?
ASIC guidance has been released with respect to ICOs. I think the important thing to note, firstly, is that there are no specific laws related to ICOs, and we're applying existing laws to a new concept. In a nutshell, if you're doing an ICO, you need to get advice on whether or not what you're offering is something that's going to be regulated under Australian law. And the sorts of features that an ICO might have, which might mean that it's regulated, is you're proposing on paying a distribution to the people who buy your tokens, or you're saying that they have a share of the underlying assets. Those sort of things will probably mean that it's either a security or a managed investment scheme and regulated under Australian law in that regard. If you're regulated as a security, that would mean that you need to issue a prospectus. If you're regulated as a managed investment scheme, that raises issues of having to hold an Australian financial services licence and meeting certain disclosure requirements under Australian law. Even where it's not a financial product, the Australian Securities and Investments Commission has been delegated powers from the Australian Competition and Consumer Commission with respect to misleading and deceptive conduct. So ASIC is now also looking at white papers from a general consumer perspective to determine whether it's misleading or deceptive, independently of whether or not it is actually regulated as a financial product.
And speaking about Australia, where do you see Australia sitting in the sphere of engaging in blockchain projects?
Look, I think that the Australian regulators are being very facilitative. ASIC in particular has issued a number of iterations of its guidance to give more and more guidance each time that it's come out. ASIC also has an innovation hub where they encourage people who are involved in new or novel things to speak with ASIC, and I think ASIC is taking a very facilitative approach. But we need to realise that what we're trying to do is put something which the law wasn't written around within that framework. So it's like putting a square peg in a round hole, so to speak.
And you think that it is possible, though, and it is moving towards that?
Oh, for sure. Look, there's nothing in Australian law that would hold back someone from doing an ICO. It's just a question of whether or not it's going to be regulated or not regulated.
Well, speaking about the laws, would you be able to give an overview of the recent AML CTF laws that have come into effect with the digital currencies within Australia?
Yeah, sure. So recently laws were introduced to require operators of digital currency exchanges, so the exchanges where you can buy and sell your currencies, to undertake AML CTF checks on people who sign up to their platform. And what that means is it's very similar to the 100-point checks that you need to do with your banks. They'll be trying to work out exactly who you are, get proof of who you are, and as part of that process they will also need to monitor transactions and report certain transactions to AUSTRAC. And so what would you say the future holds for cryptocurrencies and tax in Australia?
Well, the future is 30 June at the moment for everybody having to prepare their tax returns in Australia, and at the ATO's recent public appearance at an event in both Sydney and Melbourne, they have said that they're going to try and issue more guidance to help taxpayers comply with their tax obligations for this 30 June year and going back if they identify that they need to amend. But in terms of the go-forward future, if Australia is anything like other countries, it will be a slow process of getting guidance out. Cryptocurrency and blockchain, whilst not fitting within traditional tax principles, the view of the tax office is that most traditional tax principles still apply. So they're going to use existing guidance to the extent that they can. And it's only for those anomaly issues like where we had double GST that they may consider legislating to remove that, to continue that Australia is an innovation nation and encourage startups in this area. And from a tax perspective, as a tax lawyer, we're working very hard to submit more documents with the ATO based on our experience with clients and getting our clients comfort of tax treatment, which is getting more certainty around hard forks, airdrops, all of the nuances around cryptocurrency. So as more of those, they're called private rulings, are published on the ATO system, they will supplement ATO guidance.
Well, that has certainly been an eye-opener for me, and I would like to thank you guys for being here with us. I'm sure our viewers learned a lot more about it. Where would they be able to find out any more information with regards to cryptocurrency and blockchain from you guys?
Well, we're both at Hall & Wilcox, which is a national full-service law firm, so hallandwilcox.com.au, or find us at LinkedIn at each of our profiles, Joni Pirovich and John Bassilios.
Well, thank you again very much, guys. Thank you for joining us, and hope to speak to you again soon with anything regarding tax and crypto. Thank you. And thank you for joining us with me, Bianca McIntyre, for Crypto News Australia, your #1 source for all things blockchain and crypto.